Hello everyone, how's it going? In this video, we're going to talk about MULLEN, trading under the ticker symbol MULN. MULLEN is a very exciting and interesting stock to cover because of its high volatility providing opportunities and the ongoing projects that may fuel the speculations even further. At the same time, it's a company that has a hard time proving to the market that its relevance is for the long term and not just the short term speculation. In this video, we will go through the latest fundamentals, the price actions, and my analysis, as well as my recommendation to hopefully help you make the best decision possible. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links down in the description, as every help is greatly appreciated. Over the past few days, MULLEN went down from $1.37 to $1.19, and the closest support level around, if we can call it a support, is actually $1.20. It's been only tested once over the past month, and also once over the past 6 months. In other words, we are currently making new lows. The stock has already been under significant, very significant sell-off pressures from November 2021 and onward, mainly because the market lost hope and interest. The shareholders are mostly retail traders, and they tend to come in and out very quickly. Ever since, MULLEN has been slowing the sell-off pace, but that tendency never got really reversed or even stopped. The current volume of MULLEN shares is around 20 million shares on average, with a periodic peak around 50 to 60 million shares. What this really means is that the title is very actively traded indeed, but with a lot more sellers looking to unload their positions than those who want to increase their exposures in MULLEN. So I believe that the volume needs to reach at least to around 100 to 200 million shares in order to lift the title. Another aspect to look at is the options market. Currently, there are more calls contracts being transferring hands at $1.50 strike price, suggesting that the market consensus believes that the MULLEN will go up in the near future. Of course, that is just one indicator out of many to look at, and this indicates more like a general mood than pointing us to any specific direction. Now, I would say that overall, MULLEN has been known to be a stock that we can speculate with, that we can trade with, but not really to invest into. And it seems like the current circumstances have proven us right. Now, I'm not saying that MULLEN will never be worth investing in. However, there's a good chance that we need to see some serious revamps in the company's operations, management, and also cash flows before the current assessment is reversed. The overall profile of MULLEN tends to attract a more volatile shareholder base, as more people tend to trade in and out of their positions very quickly, increasing the level of noise in the stock before a clear trend may get identified. Now, even when a clear trend is identified, it tends to go down and not really up. In the current trend, I shall say, MULLEN is unlikely to lift itself and will need either specific catalysts or sector-wide catalysts. In other words, more money needs to pour in the sector or the company for MULLEN to be saved. Personally, I don't think that company-specific fundamental announcements are going to help that much anymore. So I really believe that going forward, we need to see sector-wide or market-wide catalysts. For example, anything that changes in terms of raising interest rates. If that freezes, we might see some knee-jerk reactions first, and then some more sustained movements afterwards. MULLEN is a publicly traded company operating in the EV sector and is listed on the Nasdaq. One of the key factors that sets MULLEN apart is its focus on developing long-range electric vehicles. The company's flagship project, I was going to say product, but it's really project, is the M115, is a long-range electric truck with a range of around 500 miles. This is significantly more than the range of most other EV companies currently on the market, making it an attractive option for commercial fleets and logistics companies. Another differentiator is that it focuses on heavy-duty electric vehicles. They have a line of buses and trucks which are designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. The company invests in battery technology as well, as they developed a somewhat proprietary battery management system, helping companies to have longer range and faster charging time. In terms of financial performance, though, the company has been having a hard time generating income, as they don't have any significant revenue streams before the distribution contract in Europe for the iGo vehicles. These vehicles should generate some income and should be reflected in the 2023 financial reports. In terms of the long-term price actions, despite the recent upward momentums, the company has been having a mostly bearish trend over the past 5 years, having traded between $5 to $10 for years before coming back to the current levels. What this means is that MULLEN has been hard hit by the ongoing stock market downfall, and a lot of people have realized that at the end of the day, some companies are just empty shells, or that they have very weak fundamentals. Now, for a company like this, I would say that a lot of investors wouldn't trust it with long-term capital investment, but they may still come back for some quick swings. So I also want to say that things can always change in the industry, so it's not because nowadays it's not worth investing in MULLEN or that you shouldn't invest in MULLEN, but this will still be the case for a few years down the road. The online communities have been initially skeptical about MULLEN regarding its capacity to survive beyond the medium term, if there is no more EV hype to fuel its stock price and to provide liquidity. The general mood has since then transformed into the high speaker of whatever the company announces. Of course, nowadays people are a bit smarter than this, and I would say that whatever happens with MULLEN in real terms would become a reason to like or to hate it. Now, basically, as far as their online footprint is concerned, the biggest factor is the price action, and this will give people enough motivation or not to have a position in MULLEN. Other factors have sometimes served as a pretext to buy its shares, such as the ongoing iGo distribution or the potential, major clients and so on. On top of that, the macroeconomic trend within the sector have been under serious pressure due to several reasons, including the increase of the interest rates, the capital flight from growth stocks to other options, the conflicts around the world, the supply chain issues, the expectation of a recession. Another factor to look at is how the flagship company of the sector, Tesla, has been doing. The EV sector is a relatively new industry, with much of it still in development. Very often, people determine whether they should purchase EV stocks based on whether Tesla is performing strongly. The idea is to profit from a sector-wide gravy train pulled by Tesla with all the other ones behind it. Of course, MULLEN doesn't always follow this trend because it's not really a fully fledged EV company. A lot of people simply perceive it as a hustling EV shell. As this has played in its favor before, it is also the reason why some people believe that it's only good for trading and not really for investing. With that being said, let's also take a look at the company's financials. The company's cash balance has decreased somewhat, but for now, it is not a major issue as the reserves remain at a decent level. The reason why cash balance is relevant to examine is because cash is used not only to finance the operations, but to satisfy short-term obligations. Without it, the company would technically go into bankruptcy, with a possibility of liquidation. So to prop up the cash positions, the company has to bring in money by either issuing debt, selling the equity, or to raise capital by selling assets. The liabilities of MULLEN has provided some encouragement, as it recently reduced the liabilities by $13 million in an announcement, but it didn't really have the effect it wished that it's going to have, because during the same period of time, the stock price fell from 55 cents to below 30. The price movement shows that, although it is a good news, it didn't really carry much weight in front of purely stock-related factors. Despite the price action downturn, I believe that it is encouraging to see the liabilities going down as it decreases the solvency risks and reduces an amount of cash outflows by contract. The last element to look at would be the profitability. It's very simple. They don't have any profitability as of yet because all they have seems to be expenses. They should have some money coming in with the IGO distribution, but even then, we will have to wait and see whether this is going to be the case in the financial reporting. Overall, the financials show us that the company wants to stay afloat. This is its intention. But can it really do that is something that is not always up to itself. It's also up to the shareholders. Now, regarding the shareholders, they're mostly retail, with some significant institutional shareholders like BlackRock, and their number for a period of time has been increasing. But I don't believe that this is significant enough for me to change my view that MULLEN is mostly for trading and short-term trading at that. Now, at the same time, the lack of significant institutional participation also means that there is very little trust from the institutional side because they don't believe that this company really means business. They might only be here to hustle around with equity money. One key behavioral difference between institutional and retail shareholders is the investment outlook. They can afford to wait longer, and they also participate more actively in the company's operations. These are the key differences between the shareholders coming from the institutional side and the retails. Speaking of the retail shareholders, the actual catalyst for MULLEN is the significant size of short positions. The reason why it is relevant is because it may trigger what we call a short squeeze. So currently there are around 40 million shares been shorted against MULLEN, the vast majority of them outside of public exchanges. So therefore we can say that they come from the institutional side. And the potential for a short squeeze is also significant in that sense because this is a phenomenon observed when traders decide to collectively buy up the price and force those who have the short positions to redeem their positions, essentially buying back their shares. The reason why they may have to do this is because the positions are borrowed from brokers, and the longer it drags on, the more financial fees they would have to pay, while risking infinite losses. The redemption acts as a purchase in the open market, which may push the stock price even higher. Now, it's important to note that the short interest is not a guarantee on the short squeeze, but nevertheless, it can be a significant metric to look at as far as finding what is the reason why people are interested in buying a specific stock when fundamentally things aren't necessarily looking good. It's also worth considering that the short sellers may have valid reasons for their bearish sentiment to begin with. So what we're looking at right now is whether MULLEN will be able to find a bottom to stabilize upon. For the time being, the bottom hasn't been reached despite several attempts, and we will try to see whether the $1.20 level is sufficiently solid. If that is the case, I would highly recommend for an entry. For the time being, it's better to stay on the side regarding MULLEN.